Okay, so we're going to take a look today at socially responsible investing. The acronym is SRI, or we're also going to take a look, as so many of these areas are evolving, at what this is, this whole idea of socially responsible investing is transitioning into this idea of socially responsible impact. So not just am I putting my money into good investment tools and instruments, but how do I measure the impact that those companies and organizations are having on their communities and all the stakeholders that we've been talking about. So the common theme, I hope I'm not droning on about this, but the common theme in all this is, how do I figure out how to get the biggest bang for my buck, and then how do I measure it? And you'll hear a lot from Clearwater Credit Union. Right in their value statement is impact investing. And so we're going to kind of take a look at what that all means. This is a great coalescence with this unit. So start with just some real basics. Primer on market instruments. So I also teach a finance class, a personal finance class. And one of the things that we always go over and that I think is important is that we're all on the same page. When I invest, when I go into the market, what does that mean? So there's lots of different instruments in the market that I could put my money into. I'm just going to cover the really basic ones. There's tons of hybrid instruments and derivative instruments. But when you own stock in a company, what are you doing? You're buying? Yep, so now I'm a what of the company? Yeah, a shareholder or an owner. I mean, I own a piece of the company, right? That's a stock. Do stocks pay a regular rate of return, or does that vacillate a lot? It goes up and down, doesn't it? Like some stocks aren't paying dividends at all because they're reinvesting all the money to grow. Stock prices can go up and down a lot. So when you invest in the stock market or in stocks, you would expect, and there's lots of different kinds of stocks obviously, but to see some vacillation in your yield and what you're going to pull from it, right? A bond is very different. And we were talking about that, who talked about green financing? Yeah, okay. So a bond, if I sell a bond, say that I'm J. Crew, and I want to raise $20 million to expand into South America, I want to open some distribution channels in Rio and La Paz and Santiago. I need $20 million. I don't want to sell any more shares of ownership. I want to borrow the money. I can't really get a bank to loan me $20 million. So I'm going to issue a bond. So I go out to all you guys and I'm like, hey, I want to borrow $20 million from you. And there's 500,000 of you, and you each give me $4 grand, and there's my money. What do you get for your $4 grand? Pay you back. I'm going to pay you back, sure, but big deal. What am I going to give you in the interim? Interest checks. I'm going to send you interest checks every probably 3 to 6 months. And lots of times bonds are really long-term, like 10 or 20 years. So as a young person, are you going to be in the bond market? You're shaking your head no. How come, Piper? What? You're like, I'm not. I'm just trying to pay my rent. It's the 1st of November. No, say you did. Say you did have money. Say you just inherited a chunk of money, and you're like, well, I might buy stocks, I might buy bonds, I might buy real estate. I'm not really sure what I want to do. Why would bonds probably not be a good fit for a younger person? Any idea? When she lends me that money, part of that $20 million, I'm going to quote her an interest rate, 4.25%. Awesome. Is that exciting?
Well, is that going to stay?
It's stable for the life of the bond, 10 or 20 years.
Yeah.
Bonds are mostly appropriate for people my age that are heading towards retirement or are in retirement. I'm not playing in the stock market. I don't have the stomach for it at my age. I'm in the bond market. Just send me my 4.25%. I'll figure out my budget around that. Okay? So the stock market, and of course it's a mix of all these different things, but in general, it's called diversifying. You want some stocks, some bonds, and there's some other instruments too. And within each of those, there's tons of subcategories beyond our scope right now. Okay, mutual funds. Can anybody describe what a mutual fund is without reading this? You've all heard the term, okay? A mutual fund has a whole slew of stocks in it based upon whatever the theme of the fund is. For example, my fund, one of the funds that I want to invest in is in metals and minerals. So every single company that's in that mutual fund sells metals or minerals, okay? Or I want a mutual fund in emerging markets. Emerging markets are Brazil, Russia, India, Southeast Asia, areas like that. So a mutual fund, and this is where I think I'd shared with you before that when I really started looking into some of my mutual funds, I realized that I owned pieces of companies that I didn't want to be a part of at all. I owned part of ExxonMobil and part of one of the organizations that's up in the tar sands in northern Canada, central Canada, right? On indigenous lands and all this horrific stuff. So point being, mutual funds own hundreds and hundreds of companies, and they spread it all over, but they sell you one share of that mutual fund, and then you own all those companies. Okay? Derivatives are passed a little beyond our scope. The bottom line here says, generally, the higher the risk of an instrument, the higher the return. So what has more risk, stocks or bonds? Stocks. Because when you invest in a stock, are you promised the principal back? Heck no. When you invest in a bond, are you promised the principal back? Sure. Not to say people don't default or companies don't default, but at least you've got an instrument that says I have a right to get my $1,000 back. Okay. So, history of socially responsible investing. In biblical times, there was a celebration or a cultural event every 50 years called jubilation. And jubilation in biblical times was when all debts were forgiven. Recognizing that when one group of people was heavily indebted to another group of people, that it caused socioeconomic skewing, and that wasn't to the betterment of the community as a whole. If you've ever heard who's the lead singer from U2, Bono, speak on behalf of African nations are heavily indebted, right, to the World Bank, he speaks on this concept of jubilation, that these African countries are never going to be able to provide for their own people when every single penny of money they earn gets paid to the world market or to the World Bank for old debt. So he advocates for jubilation. So this is sort of the historical precedent for this idea of socially responsible investing. The Quakers practiced it very early. They wouldn't invest in anything economically, particularly slavery, nonviolence. This last one's kind of interesting. I actually did a little bit of research on this. So, and actually have been going through this at the University of Montana. Do you know what the idea of divestment means? Have you ever heard that? So if I invest in something, I'm putting my money into it. If I'm divesting, I'm doing what? Pulling it out. It's the idea of institutional investors, which you know what those are, right? Big chunks of money, collective money, collective assets, divesting from topics or from companies that engage in activities that are not socially responsible. Like Coca-Cola in the early 80s was very predominant in South Africa. Okay? Still practicing apartheid. There was a massive divestment movement for institutional investors to take their money out of Coca-Cola to pressure them to quit doing business in South Africa under an apartheid regime. It worked. In the early 60s, universities all over the country were pressured to divest in tobacco companies because the first studies were coming out that basically showed a health link, right? What do you think the divestment pressures are now?
Nicotine pens.
Sorry?
Those like nicotine vape pens.
Oh, certainly, yeah, you could absolutely be on companies that the Juuls and but the big movement now is to divest in companies that accelerate climate change. We have a ton of pressure right now on our endowment at the University of Montana to divest from coal companies. How big do you think that goes over in a state that has, I'm totally making this number up, 10% of its economy depending on fossil fuel sales? Right? So it's a real, we all sit out here in Missoula and we love our solar panels, but if I live in Carbon County, everybody I know works for something coal related. I'm not really interested in divesting. So it's a very hot button issue, but it's a powerful issue or a powerful tool to move markets. And lots of universities have made a commitment to divest of anything that operates in fossil fuels. Okay, so that's been used as a powerful tool historically. Okay, so what is SRI? You've seen this term before, ESG. I am philosophically investing not only based on financial criteria, i.e. what's my return on investment and what's my yield and all those financial terms, but I'm also evaluating my investments based on ESG criteria, right? Environmental, social, and governance. And the second bullet is just the basic statement. I am aligning my policies with my personal values or my corporate mission. So obviously personal values is you or I, putting our $100 a month into our 401k. I don't, for years I put my $100 a month and some of it went to one mutual fund and some of it went to another, and I and then one day I started looking at the prospectuses and going, oh my goodness, right? I want to align my personal values with my contribution to my retirement plan. But you can also do that as a company, as a whole company, right? And so here's the three things we're going to look at. You can look at first, so it may include first, here's the kinds of things that I really want to support, program related. I want to put my investment into electric vehicles and renewable energies. So very specific. Or I want to refrain from investing in any companies that operate in fill in the blank. Fossil fuels, pornography, alcohol sales, whatever you don't want to be in, right? And And then lastly, I want to engage in this sort of elevated new area of impact investing. And this should look familiar from what we're studying about sustainability reports right now, where you can show me the combination of financial yield, or making good money on my money, and social returns. Give me some quantitative metrics how you're bettering the community I work in. Okay? Because as much as any of us personally might want to align our values with our financial investing, I've still got to get across the finish line at retirement. And so I can't be putting my monthly money into something that's giving me barely any yield, even if it's really great, right? So I need to be kind of down here on this bottom one where I want to see the social and environmental impacts, but I've also still got to make money on my money. So the historic, probably the last 30 years meaning of SRI was a screen of all the things you didn't want to do. And, obviously, health stuff, they're called the sin industries, right? Gambling, tobacco, porn, etc. But again, so when you're trying to screen out these things you don't want to invest in, like obviously a church's endowment doesn't want any part of their funds in these kinds of activities. So many things, the subsidiaries are so deep, so you don't even really know, like, I don't want to invest in Philip Morris, but I'm invested in a company that makes cigarette papers or, the additives or whatever. So there's so many, I'm probably not sophisticated enough to do that screening. I'm going to need to rely on somebody else to do that for me and say, here, Lisa, here's a package of things you might consider investing in that aligns with your values. And we're able to give much more specific. So, what do I care about? Well, I care about women's issues, and I care about humane practices with animals. Or I care about climate change mitigation. Or I don't want to support any, I'm a nurse, I don't want to support any company that sells soda pop or fatty foods. I mean, whatever your thing is, you can now screen your investments through it. So that should be kind of like, wow, that's pretty powerful. Now, with that said, when you go to work and you get on your first pension plan and you get your first 401k, you don't get to just pick from everything. They come to you with a family of funds. Here you go, Alicia. We here at ABC Company use Vanguard. And if you want us to match you in a 401k, you can choose from these 7 Vanguard products. Well, you're not going to be able to be dealing with anti-soda pop and women's issues with 7 Vanguard products. You're going to have to go to the screen and find one that most closely aligns. But if you've got like your own instrument, like an IRA, or just, I inherited $100,000 and I want to know where to put it, then I can fine tune it very, very tightly with where I want my money to be. Okay, so you kind of understand the difference between that and a company. You're limited by what they offer you. So what are some of the trends? We've been talking a lot about shareholder engagement and activist shareholders, and this is all internet fueled, where we can band together and say, hey, Apple, I see that you generate 2 million tons of e-waste a year. We don't think that that's a good business model. We want a 5-year plan to bring that number down by 50%. And they can go like, bleh, I don't want to do that. And then we can force them if together we own more than 51% of the stock. That's powerful, you guys, because before we couldn't get a hold of each other, right? Now we can join together and say, yeah, no, I want to push them on this. I don't want 20 million tons of e-waste generated a year. That's not good design. Redesign your products. We know that there's these big institutional investors like religious groups and pension funds, and it's really funny around sustainability. You've seen some really strange bedfellows, so to speak, where you'll have really conservative, evangelical, high asset dollar church endowments partnering with really progressive environmental organizations, right? So everybody wants the same thing. I want to make money, but if I can make money and also create social and environmental good, yay, I want to do that. Community investing, this is a pretty interesting concept. We tried to get this, or I didn't, but I was sort of on the edge of a group that tried to get this going about 10 or 15 years ago in Missoula, and it is working in other communities, which is, I don't want to put my $100 a month in my 401k into these organizations all over the world. I want to put my money into a fund that stays right in Missoula, Montana, and funds your bakery and your restaurant and your food wagon, right? Community investing. I want the power of my money going in circles in my own economy, right? The issues around it is, without getting too technical, when you put money into a 401k or an IRA, do you know why people choose to do that rather than just set up a savings account for their retirement?
So you can touch it. And you get something from it.
You do? Okay, so Piper started it. You put money in a 401k or an IRA. You can't touch it, otherwise you get a penalty. But why would I want to do that with my own money? Make it in a place where I can't touch it or I get penalized? Hopefully I'm getting a match from my employer. The really big thing is you don't get taxed taxed on it all those years, then it makes interest or dividends. And if you run numbers over something like 30 years, not paying tax on that interest and dividends that comes from all those assets growing and growing and growing, I mean, can be tens of thousands, hundreds of thousands of dollars of difference. So this doesn't have anything to do with this class, but I would encourage anybody to start as soon as you can. And if you can't get into an IRA because you don't have the $2,000 buy-in or whatever, put your $20 a month away until you get to the $2,000 buy-in and then start. Because every single year that you lose in your 20s, you will never get back that compounding or all those years of making money on money without taxes. You'll never get that back. So, if you start at 30, you're going to have to put that much more away every month. At 35, and the numbers just get huger and huger. I mean, there's some people wake up in their 40s and they're like, I haven't done anything. And it's like, well, if you just start putting away $3,800 a month, you'll be fine. But the number when you were 25 is like 400. I mean, I don't know if those numbers are right, but they're big differences when you look at the mathematical tables. Okay, so community investing, keeping your money in your own community. So these are obviously some dated numbers, but look at this, just the acceleration in the number of funds that are committed to socially responsible investing. I mean, you can see in 1995 it was barely even heard of. There was only 55 of them. All the way up within a 20-year period, 925. I can't tell you the number of funds, but I know the total net asset in billions right now is around $8 to $9 billion in socially responsible funds. No, trillion, 8 trillion, of course. Again, just a chart showing growth. So, you probably don't know a lot about this, but if you're in the market or putting money in the market or investing in any way, shape, or form, you want to kind of track the performance of what you're investing in some way, shape, or form. Lots of people just once a quarter will go to the mailbox and they'll take their piece of paper out and look and be like, okay, well it grew by $600. Yay, that's good. Well, is it? It's better than going down. But gosh, my next door neighbors went up $1,200, right? So again, it's that like comparative thing. So you want to be able to track it on something, some sort of an index. These are all examples now of indices that track only sustainability-oriented or socially responsible funds in stocks. And particularly the KLD. So all cap refers to capitalization, how big the company is. So it's small cap, mid cap, and large cap. That's a very good index to see the comparison of all sorts of different kinds of funds. It's a little beyond our scope probably to go dig around in one of these now, but when you get to that point in your life, I encourage you to align your finances with your values, and that you'll need to use one of these indices or have a financial advisor that's on your wavelength. So, for example, when we made the decision to do it, I knew her. There's 2 women in Missoula that specialize in socially responsible investing as financial advisors. So obviously you want to go to somebody like that to help you do that. If you're a company, you're going to use an index. So the Dow Jones Sustainability Index, there's lots of controversy about whether these are really sustainable companies or not. Is this really a marker for green? These are just the same questions any new sort of fledgling industry has, and we're dealing with that with SRI just like we are with sustainability reporting. This is kind of cool. This is, I don't know, I just threw this in here because I think it's kind of cool, but it's, of course, you've all heard of the idea, instead of fast food, we're now trying to move to slow food, and this is the idea of slow money, which is really how our whole historical economy was built in the United States, which is just mindful, slow reinvestment in the community. Booms and busts are rarely beneficial in the long term. We're sold on that. We're going to bring in 20,000 brand new jobs. Right? That just happened out in the Bakken oil fields. They built up all these towns, right, on the eastern part of Montana and the western part of North Dakota. And the city councils were like, holy crap, where do we get the wastewater and the roads and the schools for all these people? And now the price of oil has collapsed. And so these towns are sitting there with infrastructure for 20,000 and there's, 1,800 people left, which was what the town was before. So booms and busts are rarely in the long-term benefit, that people just can't stay away from that grab, even though they intellectually know it. So this is just this whole idea of slow money. Use your co-ops. Keep your capital local. It's a pretty easy read and pretty cool. And then I think this is the last slide. So just to kind of finalize, also in this whole area of socially responsible investing is this idea of microfinance. We've talked about that. Can anybody from just what we've talked about, I think, didn't I do a profile on him? Okay. Do you remember anything about Muhammad Yunus?
I remember him introducing that concept to these kind of impoverished villages.
Yep.
And it kind of helps them, build up the community without having the pressure of debt and interest.
All that. What's the cornerstone of that? What was so new about his model that's just different from a traditional bank going in and lending you 500 rupee in India?
Instead of having the capital that you would need to get those investments, you have someone come speak on your character.
Yeah. And it's different everywhere, right? It's what's culturally appropriate in India might not look at all the same in northern Tanzania, but it's like traditional Western models of deploying capital is like, here, fill out this application, bring me some collateral, and I might lend you some money. And it's like, in India, it's like, dude, I have no collateral. I barely have a roof over my head. And I'm trying to get capital so I can start a small banana plantation and maybe buy a yak someday and sell milk. And it's this idea of slow economy or slow money, right? So what is the centerstone of microfinance is it's culturally appropriate lending, and it's almost always to women, because we just see statistically that women are generally, of course there's obviously tons of exceptions to this, but generally women are more interested in community building than personal wealth, and especially in impoverished nations. So it's just another kind of socially responsible investing. The last week of school, the week before we break, we'll do a little project where there's an organization called Kiva.org. Has anybody heard of it? And they allow us to be microfinanciers. So I'm going to give you guys a little bit of money and let you go and lend money to organizations through Kiva. And it's really fun. It's a little bit of year-end giving for me and a way for you guys to go on and see so what it does is it allows people all over the world to get together and give $4,000 to a woman in Bolivia to start a mobile sanitation clinic that she goes out to schools and bills them, right? So none of us have to give the $4,000 alone. We can give it in $25 chunks. And then she pays us back. And then we get some interest. And then we get to relend it. Okay? So that can be kind of fun. Okay, so do you feel like you know what you're doing for Monday? Okay, yay. Let me just turn this off. Thank you for listening today.